What's going on, guys? It's Andy here. Welcome back to the Andy Kandola Show. So in today's video, I got a lot to cover and I wanted to go ahead and share with you guys my thoughts in regards to if you want to go ahead and buy now or if you should go ahead and wait to invest in the stock market. Additionally, we'll go ahead and run through my portfolio. I'll share with you guys some of the trades that I've been making in the last week here, as well as some of the dividends that were paid out in my portfolio. As well as I do want to share with you guys what's going on in the stock market, what's really been happening in the last week, why the market has slowly been climbing up. So let's go ahead and jump into the video. Now, in regards to my portfolio, I call this my bucket list portfolio, and basically if you're new to my channel, my goal with this portfolio is to go ahead and share with you guys on a weekly basis where this portfolio is at, as well as give any updates in regards to my strategy with this portfolio. Now, this is solely a dividends based portfolio, so all the stocks in this portfolio are purely based on dividends. My strategy is to go ahead and build additional passive income, hence why I go ahead and invest in purely dividend based stocks. So if you are new to my channel, you want to keep up with the portfolio as well as see what's going on in the stock market, make sure to hit that subscribe button down below, and honestly, if you don't mind hitting that like button as well, it just helps push the video out in front of more people, as the YouTube algorithm loves that like button. But let's go ahead and jump into what's going on in my portfolio right now. Now, this portfolio is currently sitting at $41,698. And in the last week here, the portfolio is up $91 or 0.22%. But I did get some dividends in the last day here as well for $4.26. So I will go ahead and share that with you guys as well. Now, additionally, in the last week here, the portfolio is up $463.12, as well as it's up on average 1.14%. And in the last month here, the portfolio is up $174 or 0.48 cents. In the last quarter, the portfolio is up $2,073.87, or roughly around 9.47%. And then just overall, if we look at this portfolio, the portfolio is up right around the same amount at $2,073 or 9.47%. And in total in this portfolio, because I started it about 4 months ago, I have gained $199.31 in dividends. So the dividends are definitely starting to accumulate in this portfolio. Now, some of the dividends that I just got recently is that I got $5.66 from TELUS on July 2nd, and then the same day I got $1.38 from Kimberly-Clark Corporation, and then I got $9.79 from PPL, 46 cents from Nike, and then $3.84 from Coca-Cola. So the dividends are definitely starting to accumulate in this portfolio. This portfolio is definitely growing at this point, and I'm starting to see dividends on a daily basis. Now, this was definitely not true when I started this portfolio. It's come a long way, and at this point, finally, it's starting to pay off where the strategy is actually working. Now, in the last week, I did make a couple trades that I'll go ahead and share with you guys here. I did buy Realty Income Corporation. I spent $50 and invested in that, as well as I bought Southern Company. The reason why I bought both of these stocks is because the Southern Company, I'm actually trying to dollar cost average in, and my cost on this stock was a bit higher. So in this case, I bought shares at $53.21, but my average cost on this is around $57. Now, additionally, I did go ahead and buy some of these other stocks as well. With this strategy, I basically went ahead and dollar cost averaged, and I went ahead and just bought a bunch of stocks that were basically chosen by M1 Finance and auto invested based on how I have these stocks weighed into my portfolio. So I did buy Kimberly-Clark, I bought Archer Daniels Midland, PepsiCo, AT&T, Costco, Union Pacific, Cisco Corp, Coca-Cola, Hormel Foods, Altria Group, Waste Management, Procter & Gamble, Clorox, and Ecolab. So guys, these are basically all the stocks that I actually invested in. Now, with my strategy and with this portfolio, I basically have it broken up in the 11 sectors in the S&P 500. So if you want to check out any of my stocks that I have in my portfolio, I do have a link down in the description. I'm not going to get too much into that in this video. But now, additionally, I am looking to create a new series on this channel, basically where I go ahead and review different portfolios portfolios, and if I was to invest in those portfolios, what are some of those changes that I would make, or maybe some additional feedback. But it's a nice way to go ahead and see other people's portfolios as well as just learn from the community. So if you do want to go ahead and have me review your portfolio, go ahead and email me your portfolio and provide me with a quick description as far as what your goal is with that portfolio, and my email is going to be in the description below. Now let's go ahead and see what's been going on in the news lately and where the market's been. Now as far as the stock market goes, the stock market in the last week here has slowly been climbing. Right now the Dow Jones is currently sitting at 25,827 points. So basically it's not a bad thing that the stock market is starting to climb back up. Obviously if you're trying to dollar cost average, or if you're just entering the market, we'll go ahead and run through if it's a good time to go ahead and invest right now, or if it's worth waiting in the meantime. Now one of the biggest things and one of the reasons why the stock market has climbed in this last week is that the unemployment rate actually fell. Based on the expectations, the unemployment rate was expected to be at 12.4%, but based on the reports, the unemployment rate was lower at 11.1%. So that's been pretty big news, because that's over 1% decrease in unemployment. Now payroll did increase by 4.8 million in the last month, and what was expected was 2.9 million. So that is extremely good news, because it does seem like that some of these companies are opening back up and some of these jobs are starting to come back into place. So that's definitely good to see as the economy rebounds. Obviously we know that we're still in the middle of this pandemic, and some of these states are actually still rising as far as their cases go. So slowly I do believe that the economy and businesses will start opening, but if this virus goes ahead and spreads even more, then hey, we might go ahead and see another second wave, and we might see the stock market come down again. Now, if we look at some of the jobs that have actually been bouncing back, some of the jobs that have actually turned around has been the bar industry and the restaurant industry, as well as the clothing industry. If we look at this curve here, it's basically showing us that some of those industries just went totally down because they were obviously shut down at a certain point. But now we're starting to see some of those industries go ahead and climb back up. So I do believe that's one of the main reasons why the unemployment rate fell tremendously and why the stock market has been going up. Now, of course, let's go ahead and jump into as far as if it's a good time to go ahead and invest in the stock market right now, or if it's worthwhile to go ahead and wait in the meantime. Now, here are my reasonings, and here's some of the things that I think are a good place to go ahead and start when we're looking at if we should go ahead and wait to invest in the stock market. Now, as I went ahead and thought through this, the reasons why you might want to wait to invest in the stock market is maybe timing the market. If you're expecting the market to go ahead and go down a little bit more, or if you think that we're still not out of this pandemic and you see a second wave coming, hey, maybe you want to go ahead and wait, because the market could drop another 5 to 10%. Additionally, another big reason why I see a lot of people not invest in the stock market is because they don't want to go ahead and lose their money. Now, additionally, a big bias around the stock market is that it will take forever to see profits. So why would I go ahead and invest in the market now? Maybe the goal is to go ahead and accumulate more money. So when you invest in the market, you have a lot more money that you're investing. Additionally, not maybe understanding which companies to go ahead and invest in, or not knowing how many companies to go ahead and invest in, or just where to start in general. Now, I know just starting off in the stock market, a lot of people usually want to wait because they don't have enough money to invest, or they just don't think investing $5 or $10 in the market is just worth it at this point. But those are just some of the reasons why I think waiting to invest in the stock market could be some valid reasons. But now I do want to share with you guys some of the reasons why it might be worthwhile to go ahead and invest in the stock market right now. And some of those reasons are basically by starting early to invest in the stock market, you might actually be better off, because studies have shown the earlier you start investing in the stock market, the better it is based on historical data. Now, on average, the stock market does go up by 7% on a yearly basis. But based on your time horizon, of course, I can understand the next 3 to 5 years could be a bit risky. But if you're in the stock market and you're looking to invest in the stock market for the long term, it might not be a bad idea to go ahead and start looking at investing, because historically speaking, the returns should go higher. Now, additionally, when you're investing in the stock market, you are learning through your experience. So as I wrote down here, by dipping your feet in the water, that's the only way you're actually going to learn how to swim. So the same thing goes with the stock market. Until you actually start investing in the stock market, you're really not going to figure out if this is the right type of investment for you. And there's many different investment strategies within the stock market as well. Now, one of the biggest things that I've actually learned from Warren Buffett's strategy is the power of compound interest. Now, to me, compound interest should be the eighth wonder of the world, because once you learn the power of compound interest, it's a very powerful tool, and it actually shows you that by investing early, you can actually compound that money by reinvesting that money, and over time it'll just grow exponentially. So now let me go ahead and kind of share with you guys a calculator here just to show you guys a quick example. Now, there is a link on NerdWallet, and I will go ahead and link this in the video below. But basically, if you use a compound interest calculator just to get a rough idea of how much your money will actually compound over time, let's just take this calculator and go ahead and see how much the money can accumulate if we were to go ahead and initially deposit $1,000 into the stock market, and then on a monthly basis, if we were to go ahead and invest $100. And we're going to say that we're going to be investing in this portfolio for the next 25 years, and we're going to go ahead and look at an estimated return of 7%. Just like I mentioned, in the stock market, you can go ahead and expect a rate of return for 7%. Now, as we're looking at this graph actually shows us how much money we'll actually have in the future. So in this case, the blue bar is actually all the principal that we have invested in this portfolio. So if we look in 25 years from now, we would have invested $31,000. But in interest, because on average we are seeing a return of 7%, we would have gained $50,362, or had a future balance of $81,362. Now, this is the power of compound interest. Obviously, it starts off slow, but as you're reinvesting that money, and as that money is making you more money, you are gonna go ahead and start seeing that money accumulate a lot over time. Now, the earlier you start with the strategy, the better it of course is, because that money will just compound, and you'll basically have more time to go ahead and let that money compound. So guys, this is basically the simple strategy in regards to compound interest. This is one of the strategies that I've learned from Warren Buffett, and basically this has changed the way I think in regards to investing in the stock market. Now, I'm going to go ahead and share with you guys some of my thoughts if you're looking at either investing in the stock market or if you're looking at waiting. Now, Kevin O'Leary, one of his quotes that I actually stuck with me was, he mentioned in one of his videos that my mom taught me to buy what you want only with the interest from your investments. Basically stating that do not invest in things that are not making you money. Invest in things that are making you money, and take that money and take the interest from those things and go ahead and buy the things that you want. So for example, if you're looking to buy a more expensive car, more expensive house, invest properly and take those investments and go ahead and buy the things that you actually want to buy, but invest first. Now, some of those investments do include investing like in the stock market, for example. If you have a dividend income strategy, you're actually building additional income by just investing in those companies. Also, it could be in real estate. When you're investing in real estate, you have tenants paying you rent. That rent is additional income that you're getting on a monthly basis. So you can go ahead and use that additional cash to buy the things that you want. Now, one of the biggest lessons that I've learned by investing is to go ahead and start as soon as possible. The sooner you start, the sooner you will actually start seeing your money grow and make more money for you. Now, I just shared the compound interest calculator. That to me is the eighth wonder of the world, because that is basically money making you more money by not doing anything. Basically, you could be sleeping at night and you're still making more money just by investing your money and not doing anything and letting that money grow. Now, unless you don't think that the US economy is going to rebound, that is basically the only reason that I can see somebody not investing in the the US market. Is if you think the US market is going to collapse, or if you don't see the US market grow in the next 5 to 10 years or get out of this pandemic or whatever it may be, then of course use your judgment and maybe you don't want to invest in the US market. And next, at the same time, if you are going to invest in the market, understand the businesses that you're investing in. Now, the best thing about investing in the stock market is you're basically investing and becoming a part owner anytime you are a shareholder of a company. Obviously, each company has billions of shares out there, so yes, you're not going to have a majority stake in that company, but still, you own that company. And that's one of the best feelings by owning individual stocks, is you actually feel like you're a part owner of those companies. So invest in companies, if you're starting off, that you actually understand, or brands that you actually recognize or you like. For example, in my case, I have an Apple laptop. I use a lot of Apple products. So I like investing in Apple because I actually understand that company and I use their product line. Same thing with Microsoft. I use a Microsoft laptop for work. I see their technology. I don't see them going anywhere anytime soon. So hence investing in that. And there's many different examples out there. Now, additionally, when investing in the stock market, the sooner you do start, the sooner you'll actually learn the type of strategy that you want to use. But understand that you should have a strategy, stick with the strategy, as well as understand the risk of investing in the stock market. Now, stock market and any company at any given day can go ahead and file bankruptcy or disappear tomorrow. So reduce your risk by not investing too much into one particular company. Now, my focus and my goal is to never invest over 20% of my savings into one particular stock or in investments. So I like to focus on basically taking 20% of my savings and investing it into the stock market, and then taking the rest of the savings and going ahead and diversifying, having an emergency fund, or basically investing in maybe real estate or some of those other investment options out there. But in general, as far as the argument between buying now or waiting, I personally do believe that buying now is the better way to go, because with the power of compound interest and just with the overall learning experience that you get by dipping your feet in the water, you don't get by just sitting on the sidelines. Now, my strategy is dividend income investing, and why I like to focus on this strategy is because I'm building income at the same time. By investing in these particular stocks that are paying out a dividend on a monthly basis, I'm able to go ahead and rely on the income that I'm building, and at the same time, because I'm not relying on the actual market price of that particular stock, I can get some sleep at night. Now, a lot of times in the past, investing in the stock market, I could never calculate if I made the right call, because I could have maybe invested in a particular stock when it was lower, and at that point I just didn't feel comfortable investing in the stock market, because I was basically looking at the stock market every hour of every single day to go ahead and determine if I'm buying the stock at the lowest price, and then at the same time I'm trying to figure out when to sell that stock. So that was a lot harder for me to go ahead and determine, where now with dividend income investing, I'm purely focused on the income that I'm building by these companies paying me out a dividend. And at the end of the day, because the stock market historically is going up in price, I'm expecting these stocks are just gonna grow over time as well. But with this strategy, it keeps me disciplined and I can basically get some sleep at night. Now, additionally, with this strategy, if you are new to investing and you want to take advantage of this particular type of strategy, the easiest way to get started is to look at some stocks that are considered dividend kings or dividend aristocrat. Basically, dividend aristocrats are stocks that have been paying out and growing their dividends consistently for the last 25 years, and dividend kings are stocks that have been growing their dividends for the last 50 years. So those are some of the safest stocks that you can rely on their dividend, because they have historical proven data that they are basically not going to be cutting their dividends anytime soon, and those companies are just more reliable on their dividends because they're more established and they're safer companies to invest in. But guys, that's in general in regards to my strategy and why I like to focus on dividend based investing in my current portfolio. So hopefully you guys enjoyed this video, but this is basically going to sum it up for this video, guys. Now, if you are new to my channel, make sure to hit that subscribe button, and if you like videos like this, make sure to hit that like button as well. If you have any questions, or if you wanted to know anything in regards to my portfolio or just in general about this topic, make sure to leave a comment down below. But thank you again, guys, for watching this video. I will see you guys at the next one.